For decades, the United States has reigned supreme as the world's undisputed economic superpower. Yet a challenger has emerged from the East, China. With its meteoric rise, China has become the world's second largest economy, prompting a question that reverberates across global markets and think tanks. Will China overtake the USA as the biggest economy? The answer, as with most complex geopolitical and economic issues, is far from simple. It hinges on a multitude of factors, from trade relations and technological innovation to demographic shifts and domestic challenges. This essay will delve into the heart of this question, examining the current state of US-China trade, the impact of the ongoing trade war, and the long-term challenges confronting both nations. By analyzing historical trends and projecting future scenarios, we can begin to comprehend the forces shaping the global economic order and whether China is indeed poised to claim the mantle of economic supremacy. The rivalry between the United States and China is not merely about economic indicators, it's a contest between two distinct models of governance, innovation, and global influence. Understanding the trajectory of their economic fortunes requires looking beyond the numbers and delving into the complex interplay of political, social, and technological forces shaping the 21st century. The US-China trade relationship is perhaps one of the most consequential bilateral economic engagements in the world. It is a relationship characterized by both deep interdependence and simmering tensions. China has become America's largest trading partner, with billions of dollars in goods flowing between the two countries annually. However, this economic symbiosis is marred by a significant trade deficit that the US faces with China. This trade deficit, reaching hundreds of billions of dollars annually, has become a point of contention, fueling protectionist sentiments and prompting the implementation of tariffs. The US has imposed tariffs on a wide range of Chinese goods, from electronics and machinery to furniture and textiles. China, in turn, has retaliated with tariffs of its own, targeting key American exports like soybeans, aircraft, and automobiles. This tit-for-tat tariff war has introduced significant uncertainty into the global trading system, disrupting supply chains and impacting businesses on both sides of the Pacific. While the US aims to reduce its trade deficit and protect domestic industries, critics argue that tariffs ultimately harm consumers and businesses by driving up prices and hindering economic growth. When assessing the likelihood of China overtaking the USA economically, a crucial factor to consider is the respective growth rates of the two nations. For years, China has boasted significantly higher economic growth rates compared to the United States. This rapid expansion has allowed China to narrow the gap in economic size and fueled its global ambitions. However, in recent years, China's economic growth has begun to slow, partly due to internal factors such as a rapidly aging population, rising debt levels, and a need for economic rebalancing. The US, while experiencing more modest growth, has benefited from a more resilient and diversified economy. Despite the recent slowdown, China's economy remains a formidable engine of global growth. Its vast manufacturing capacity, growing consumer market, and ambitious infrastructure projects continue to attract significant foreign investment. The US, with its innovative tech sector, deep financial markets, and strong consumer spending, also remains an economic powerhouse. The interplay between these two economic giants will continue to shape the global landscape for decades to come. The US-China trade war, initiated in 2018, marked a significant escalation in economic tensions between the two superpowers. Beyond tariffs, the trade war has encompassed accusations of intellectual property theft, forced technology transfers, and unfair trade practices. This trade war has had far-reaching consequences for both countries and the global economy. Businesses have faced increased costs and uncertainty, leading some to shift production away from China. Consumers have also felt the pinch of higher prices on imported goods. While the trade war has subsided somewhat in recent years, with the signing of a Phase 1 trade deal, deep-seated mistrust and structural imbalances remain. The Biden administration has maintained a tough stance on China, emphasizing the need for a level playing field and fair trade practices.